The Bank of Canada has been on an interest rate hiking spree for months, and today the bank announced it's increasing its key interest rate again by half a percentage point. That brings the rate to 3.75%. For people looking to apply for a mortgage or refinance their current one, the volatility of the market is causing major headaches. Everything Financial's Peter Sashecki joins us this morning to make sense of it all. Good morning. Thanks for being here.
Morning.
We should just quickly ask you, that interest rate hike was completely expected.
It was completely expected. We've been talking about it for a while, and probably one more to come, but these are having the effect on inflation that the government wants to do, and it's, as we mentioned before, it's called front-loading the interest rates. So we're doing them, Canada is, right at the beginning, really high, and that'll have about a 12 to 15-month effect before we see the full effect on inflation. But it is working, though. In BC, we wonder if it's working every time we go to put gas in our car.
Yeah, it's all.
But that's a whole other story.
It's all costing us more money, that's for sure. So now with these changes, there is a lot of pressure on home buyers. Tell us when the best time to renew a mortgage, to refinance a mortgage. You know, what are people looking at right now?
If you don't need to renew it, leave it where it is, for starters, because why bring in any unnecessary fees and charges, which really make things more expensive? If you're happy with the mortgage you have, don't fall victim to the fear mongering. And there's a little bit of it out there. It's not the norm, but it's the exception for sure, where people are telling people that, oh, the rates are going to be those of the 80s. We're going to hit 18% again. You should change again, even though you just changed your mortgage 6 months ago. And that is going on a little bit. Again, it's the exception. If you're happy with it, leave it. If your mortgage is up for renewal, look at a 1 to 2 year rate. These interest rate increases are temporary to affect inflation. They're working, and we're seeing these higher rates probably for about a year or two. So don't go locking yourself into a high rate for the next 5 years. Look at something more shorter term.
Okay, so refinancing a mortgage, what's involved with that process?
Well, you basically reapply. The mortgage company or mortgage broker will put out a new proposal for a new mortgage, and you're basically tearing up the old one, putting in a new one, but you have to pay fees. And the term you'll hear, and this is what you want to watch out for, is blend and extend. So people think, well, there's no fees. Well, I'm blending, which means I'm taking the interest I owe, I'm adding it to the new one, and I'm extending my finance term. Blend and extend. So you are paying fees. It just has a nice little ring to it, so it doesn't seem as bad.
Are there other sort of catchphrases or terminology that we should be looking out for?
Well, one thing you should look out for is what's the commission. Now, mortgage brokers do have to disclose commission of what they're making, but it's at the very end of the process. And by that point, you're already deep into the application, you've committed. So you know what? Do your due diligence. When you talk to your mortgage broker, ask them right at the beginning, what's the commission for the different mortgages, 1 year, 2 year, etc. And then make your decision based on that, or help make your decision, rather than get stuck with something you don't want. Because you know what? 5 years is an awfully long time, and most people end up paying fees when they go into a 5-year mortgage.
What about for people who think they're going to time the market? Like, what is that exactly, and what is the impact that it could have?
When's the lowest day to get my mortgage? Same with market and buying investments. When is it the lowest day? When is the best day? I can guarantee that I can tell you the best day. Just give me 6 months and look back in my rearview mirror, and then I'll tell you exactly when the best day was.
That was the best day.
Yeah, you can't time the market the best day. Stick to a plan. Look what fits in your budget, your cash flow, and then stick to that plan and be diligent. And don't let emotion guide your decision. Emotion is never a good thing when making a decision about finances.
People are definitely facing a lot of pressure right now when it comes to their finances.
Check emotion at the door. Use logic and common sense.
Okay, Peter Sashecki with Everything Financial. Thanks for joining us this morning.